What if I told you a 13th century math sequence could be your secret weapon in today's wild trading world? Sounds crazy, but understanding Fibonacci can be the difference between guessing and trading with confidence. Ever feel like you're just hoping for the best, missing entries and exits, or getting stopped out right before the market reverses? I've been there. But what if you could anticipate those turning points with much more accuracy? In this video, I'll show you how Fibonacci can revolutionize your trading. Practically, not just in theory. Let's dive in. Let's get right to the heart of Fibonacci trading, the retracement tool. When prices make a big move, they rarely go in a straight line. Instead, they pull back, a natural pause before the next move. Fibonacci retracement helps us measure how far that pullback might go. Think of it like stretching a rubber band. It snaps back a predictable distance, not all the way. Fibonacci levels are those common snapback points, support and resistance zones that traders watch closely. These levels come from the Fibonacci sequence, 0, 1, 1, 2, 3, 5, 8, 13, and so on. The ratios, like 0.618, the golden ratio, 0.382, and 0.5, show up everywhere, including financial markets. When you apply the retracement tool, you're mapping out high probability areas for price reactions. Draw it from a swing low to a swing high in an uptrend, or the reverse in a downtrend. The tool plots key levels, 3.6%, 8.2%, 50%, 1.8%, and sometimes 78.6%. These are your safety nets. If price pulls back, it might bounce at 23.6%. If not, watch 8.2%, then 50%, and so on. The 61.8% level is especially significant. A deep retracement, but often a strong foundation for the trend to continue. Instead of panicking when price moves against you, use Fibonacci to see if it's just a healthy pullback. It's not a crystal ball, but it gives you a logical, math-based roadmap for price behavior. Use these levels to look for confirmation from other indicators or price action before making decisions. Prices move in waves, not straight lines. Fibonacci retracement helps you measure those waves and spot key support or resistance. Once you see the market's rhythm, you can't unsee it. It's a game changer. Now let's focus on the Fibonacci sweet spots, 8.2%, 50%, and 61.8%. These aren't random. They're psychological and mathematical magnets for price action. The 38.2% level is often the first real test during a pullback. If the trend is strong, price might only dip this far before bouncing. The 50% level isn't technically Fibonacci, but it's a major psychological battleground. Halfway back where buyers and sellers often clash, the 61.8% level, the golden ratio, is the last line of defense for a trend. If price holds here, the trend can resume powerfully. Why do these levels work? Because so many traders watch them, they become self-fulfilling. Big institutions program their algorithms to react at these points. So you're trading alongside the smart money. If you miss the initial move, these levels offer a second chance to enter. If you're already in, they help you decide where to take profits or set stops. For example, a decisive break below 61.8% might mean the trend is over. Watch how price behaves at these levels. Does it hesitate, bounce, or break through? The answers reveal the trend's strength. It's not always perfect, sometimes price overshoots or consolidates, but these levels are high probability zones. Combine Fibonacci with other analysis for best results. Mark these levels after any big price swing and watch for reactions. They're the market's natural breathing points, reflecting deep patterns in human behavior. Learning to spot and respect them is like learning the market's secret language. Use them to structure your trades and manage risk. These are your high probability decision zones. Master them, and you'll see the market differently. So, Fibonacci retracements help you find entries, but how do you set profit targets? Enter Fibonacci extensions. Extensions project where price might go after a retracement, giving you logical, math-based targets. The most common extension levels 127.2%, 161.8%, and sometimes 261.8% for big moves. The 161.8% level is especially powerful again, the golden ratio. To draw extensions, you need 3 points, the start of the move, the end, and the end of the retracement. Think of it like an archer. The initial move is drawing the bow. The retracement is steadying the aim, and the extension levels are the target rings. Extensions help you set realistic profit goals and manage risk. If you know your entry stop loss and extension target, you can calculate your risk-to-reward ratio, crucial for smart trading. Don't just aim for the furthest target. Start with 127.2% or 161.8%. If momentum is strong, look higher. Always consider market context, news, major resistance, or other indicators. Remember, extension levels are zones, not exact lines. Look for confluence with other signals. Using extensions brings discipline to your trading. Structured entries, stops and exits. That's what separates pros from gamblers. Let's see Fibonacci in action with a real-world example. Apple, AAPL. Imagine Apple rallies from $150 to $180, a $30 move. After peaking, it pulls back. We draw our Fibonacci retracement from $150 low to $180 high. Key levels appear: $172.94, 23.6%, $168.81, 38.2%, $165, 50%, $161.19, 61.8%. Price drifts down, slicing through 23.6% and 38.2%. The pullback is serious. At $161.19, 61.8%, price finds support, maybe forms a bullish candlestick, and buying volume surges. This is a classic Fibonacci setup, a prime spot to consider going long, with a stop just below 61.8%. For profit targets, we use Fibonacci extensions, from $150 to $180, then from $161.19, the 127.2% extension projects to $188.03, and 161.8% to $198.58. Entering near $161, $162, your first target is $188, and if momentum is strong, $199. That's a $26, $37 per share move, all mapped out with Fibonacci. The lesson? Patience pays. Wait for pullbacks to key levels for better entries. Fibonacci gives you clear zones for entries, stops, and targets, combined with other analysis for confirmation. These patterns repeat across stocks, timeframes, and markets. Train your eye, act with discipline, and let Fibonacci guide your trades. Ready to use Fibonacci like a pro? Here's how to get started, fast. First, never use Fibonacci alone. Combine it with other indicators, moving averages, support resistance, or candlestick patterns, for stronger signals. Look for clear, significant price swings. Don't draw fibs on every tiny move, focus on obvious highs and lows. Pay close attention to price action at Fibonacci levels. Wait for confirmation, like a reversal candlestick or volume spike, before acting. Practice drawing fibs correctly. In an uptrend, swing low to swing high. In a downtrend, swing high to swing low. For extensions, use 3 points. Always use stop losses. Place them just beyond your entry fib level to protect your capital. Here's a quick checklist. 1. Identify a clear price swing. 1. Draw your retracement tool. 1. Note 38.2%, 50% and 61.8% levels. 1. Wait for price to pull back to a level. 1. Look for confirmation. 1. Set your stop loss. 1. Use extensions for profit targets. 1. Combine with other analysis for confluence. Remember, higher timeframes carry more weight. Daily or weekly fibs are stronger than those on a 1-minute chart. Don't get discouraged. Practice makes perfect. Review your trades and learn from both wins and losses. The more you use Fibonacci, the more intuitive it becomes. There you have it. Fibonacci retracements and extensions can transform your trading. We covered the key levels, how to use them for entries, stops, and targets, and even saw a real-world example. This isn't just about drawing lines, it's about understanding market psychology and trading with structure. If you found this helpful, hit like, subscribe, and drop your questions in the comments. Remember, mastering trading is a marathon, not a sprint. Keep learning and practicing. As Jesse Livermore said, the stock market is never obvious, it is designed to fool most of the people most of the time. Fibonacci is your edge. Use it wisely.